Alright, what's going on everybody? Mando Trading here. Sorry I couldn't get on live tonight. I'm super busy right now and I had a lot of stuff I had to do heading into the weekend. So I just want to go over the indices real quick and some possibilities and a game plan going into CPI data tomorrow, preferably after. If you are carrying something overnight, I hope you're good at flipping coins, because I think that's really where we're at right now, heading into tomorrow, because I could totally see two possibilities that are clearly playing out. And ultimately, I don't really care what I say tonight. It's not going to really have any impact, as no one's going to be able to foolishly just go in and buy something when it's probably not the right idea, because the market's closed. So let's get into it really quickly. So we'll take a look at the weekly chart. Obviously last week, no additional answers for us, as we did not take out last week's low, or the previous week's low, I should say. We did take out the previous week's high, but right now kind of sitting right around weekly open, in which occurred Sunday night at 6 p.m. So that's where we are on the weekly chart. Not much right here, right? No imbalances have formed over the last couple of weeks. You'll notice on SPY, you actually have a bullish order block on the weekly. You do not have that here on NASDAQ. So that's just the first little takeaway by looking at the weekly time frame. If we're to drop it down over here into the daily, we'll take a look and we'll notice that our new weekly range. Why is this my range? So prior to this, we had this low to that high, which took out that high right there. You'll notice there was no 50% retracement. So without there being a 50% retracement, we have to wait for there to be one, right? So you'll notice that here's our retracement, bing, getting into discount or below that 50% mark. And after that, there's our run for highs. So that is the current range we're sitting on, right? You'll notice that there really aren't many imbalances here to hold us up. This is a daily order block, but that is about it. We do have relative equal lows below, so that's alarming. That's something that could absolutely happen, and if we are to take out that low, that's where things get a little problematic for the bulls, in my opinion. And there is one caveat to that, but by taking out those relative equal lows, you would actually shift market structure on a daily perspective bearish. The caveat to that is, despite us shifting market structure bearish, that we really don't have any imbalance in discount of that range that we can really key in on, unless we look towards the 4-hour chart, which we will in just a second. So for example, if we were to take that low, and let's say because we took liquidity, you'll see a sharp bounce, right? You'll notice that there's no imbalance up here in discount of the range. So that makes it a little more unclear as well. If you were to look at ES, this is kind of where things switch just a hair, and it's that we actually have not gotten into discount, whereas on NASDAQ we have, right? So for viewing purposes, of course, but that would be, the run that took out this high, no 50% retracement. Here's your retracement, no 50% still, and we have still yet to do so on ES. So while NASDAQ's daily range would technically be bearish, ES's, which is SPY, would not, and that is honestly, that I don't like that. I don't like when that happens. It's kind of annoying. This daily candle could absolutely paint a bullish order block, and there are a few names that I'm looking at specifically that can absolutely do so as well. So that is another little add in there. But if we're just to go back to the 4-hour chart, and let's say we do end up sweeping those relative equal lows, remember, relative equal lows would also kind of or just logically, that would create two pools of liquidity, right? The longs who went long here and the longs who went long here, to protect that position down here. So by doing that, you're triggering two pools of liquidity. There's a very, it's very possible for liquidity to get swept for a run higher. Now, unlike the daily, if we were to look at the 4-hour, and let's say we do end up, let's say it's just by a little bit of a tick, right? You'll notice this 4-hour imbalance that I've highlighted in dark red right here would actually be in discount of that bearish price run, okay? You also have this right here, that is an hourly bearish fair value gap, and here that black is an hourly bearish breaker, okay? So there are a lot of things that are kind of in the way, if you will, in terms of the bearish point of view. But the big difference here over everything that I just stated, because you might say, oh, well, Mando's a little bit bearish, and ultimately it really doesn't matter. because we're going to have information prior to the market opening anyways, right? So that should really make it a much more clear picture as to what we're going to see moving forward. And that's fine by me. I would prefer that, actually. So whether we go up or down on CPI, it doesn't matter. It's really what happens next. So for example, if we were to take out that low, I would anticipate some sort of bounce to get us back up into that 4-hour fair value gap. There's also a possibility that we run off the initial report of CPI, which ultimately is it could end up being about 150 points higher. This is the showtime imbalance. And what I mean by the showtime imbalance, and anybody in the group who's listening right now, you've heard me say this multiple times, and in times of uncertainty where we can kind of see it both ways very clearly, we're going to come to a point where we look towards an imbalance and say to ourselves, okay, this is going to give me a lot more additional information, right? And here it is, simply put. If we are to mount that 4-hour imbalance, my expectation would be a run for highs and a continuation of this bullish range that we've had since October. If price gets back into this 4-hour imbalance in conjunction with your bearish breaker and your hourly bearish fair value gap, I would expect a retracement lower, right? And if we were to get that daily market structure shift on NASDAQ, which occurs realistically, it's here. Ready? Low, high. So we have that bearish range. We sweep that low, come back up into that 4-hour imbalance, and from there, I think our target would be much lower, and that could be the spur of a retracement on a higher time frame, such as the weekly, which would be, it would feel like the end of the world, right? For us to retrace down to 50%. But remember, that's really where I like to get them, right? Think about it. Even this trade right here, the one from October, ready? Price run that took out that high right here. There's your discount retracement, bullish breaker, bullish imbalance right here as well. Run for highs. So either way, going into tomorrow, I know, that you might not be, the most insightful, and honestly, I hope no one really is carrying too much of anything into what is essentially, to me, a bit of a coin flip, as to where we kind of end up. But the game plan for after the fact is what I'm more interested in, and something that we can actually trade off of with using information that we have available. So that's all I have for tonight. We will get back for a live class tomorrow. If you guys haven't already, check out the Google Classroom, which is the Outer Rim Academy. Check it out and kind of take care of some of the missing assignments. There are a few missing. If you want me to take a look at them, just get them in soon, please. And that would be all. So we'll have a live. We'll have 3 more lives this week. And this week the focus really is going to be market structure, and I think that works well with what we currently have in front of us, as there is a potential for a market structure shift here moving in. Actually, one more thing. Sorry. I want to just talk about this really quickly because I think this is really important. Check out the dollar, okay? So if we are looking at the dollar right now, the dollar doesn't look very good, okay? So if we see lower on the dollar, that to me would show me higher prices on the indices. Okay, so for example, this weekly candle, this could absolutely paint a bearish fair value gap on the weekly. Okay, you'll notice we came up here, took out these equal highs into this bearish fair value gap on the weekly, and have rejected thus far. At this point, this is a weekly order block, kind of a smaller one, no imbalance. Our only untouched imbalance is down here at 102.75. That would be an area which I'm interested in. But ultimately, if we are bearish, my expectation would be that price kind of gets up, prevents the formation of this imbalance right here. But if the indices are bullish, my expectation would be these imbalances. This one specifically, it already filled and has offered a bounce, but this one specifically does not carry much of any weight, and we melt towards the 165, or no, what is it, 160-ish, and ultimately going down to that 99.81, in which that will satisfy my downside target and the completion of a bearish Mando model here on the dollar. So that's just another additional thing. If the dollar looked great, I would be looking at tomorrow a little differently. But again, I'm not trying to call the top. I think that is a fool's game. To me, think about it. Not only are you getting stopped out on your shorts for all the people who have been trying to short this thing all the way up. You're also missing out on the opportunity for longs. So for me personally, I would rather use previous data to my advantage, which something as simple as waiting for a weekly imbalance to form, which there's one, and that kind of sets the tone. Here's another. There's your attempt to get back into it for another leg lower. There it is. And each time that we formed a bearish imbalance, one, there it is again, we have gotten an additional opportunity to re-enter that short. So to me, why am I trying to call the top? Not only am I missing out on the long opportunities, but I'm also getting stopped out on my shorts. So I would prefer the market to just prove it to me. I'm going to get an opportunity to look for lower, and that's fine. But I will wait for that to happen before doing so. So that is all I have for tonight. Again, sorry I couldn't make it on. I got a lot of stuff to do to prepare for this weekend. So I will catch everybody tomorrow. If you have any questions, feel free to reach out, and we'll talk soon.